Okay, so yes, I invested about 108,000 and some change at what turned out to be the recent peak of the S&P 500. I loaded that up in December, January, February. I'm gonna, throw some screenshots up to prove the orders, if you will, and whatnot. And yes, I'm down tens of thousands on paper, but here's the thing: I'm not panicking, and today I want to explain why. I want to think long term. I want to give you my plays on just what's going on in my head, the psychology behind it, what I'm doing, what I'm also most importantly not doing, and just break down everything. Okay, so it's not wasting any time. The current situation, right? We are in officially a bear market as I'm recording this of April 9th. This is down more or less 20% from the highs. The news is full of, tariff talks, if you will, recession fears, market chaos, 2008 all over again. Like, your portfolio is probably bleeding red, right? No matter what you're in. But let's take a step back. Let's remember something crucial. This isn't like the first bear market, and it's probably certainly won't be the last. That's another thing I like to talk about. It's like, be realistic. This is probably going to happen again. What is my personal approach? When I invested that over six figures amount, I wasn't trying to time the market, right? And I know this is the cheesy quote. I was committed to time in the market. I've talked about this in other videos before. I'm addicted to seeing my overall number of shares increasing rather than the value of those today or even tomorrow or a year or two from now, because I just know over a 5 to 10 period or longer, when I actually need the money, they're naturally most likely going to be worth more. And none of this is financial advice. This is just personal opinion and personal data. And I'm looking at this, I'm like, I don't care. I'm just obsessed with seeing I own thousands and thousands of shares of the S&P. That's what I'm focused on right now. Look at any 20-year period in the market, despite wars, recessions, freaking, if I could say it, the pandemics, political stuff. Like, the market has consistently rewarded patient investors. That is the name of the game. I'm not trying to day trade. I'm not trying to catch the falling knife and get blood on my hands, right? And like let's go into the psychology of like fear, if you will. The financial media, even just media in general, it thrives off fear, guys. These weird headlines that are meant to make you, feel like there's a meltdown happening, that stocks are in free fall. And yes, even though it may be, naturally true, what can you do in the moment? We're going to talk about that in a couple of minutes. But these headlines are designed to keep you glued to the screen, not help you with your investments or your strategy. Remember, emotions and investing does not mix well. I've done it before multiple times, specifically with single stocks. It is the absolute worst thing you can do, right? The average investor significantly underperforms the market precisely because they buy high when excited and they sell low when scared. I've been there. I've done that. Trust me. Right? And going deeper onto, like, if I could call it a recent event, historical perspective, I was a kid when it happened, but during the 2008 financial crisis, the market dropped over 50%. If you sold then, you locked in those losses. If you just held, you not only recovered, but you saw insane amount of gains in the years that followed. Now, I understand it's easier said than done, especially people close to retirement. Like, that's just not my audience. If you're watching this and you're somehow 40, 50 years old, like, this video definitely isn't for you. But for my young guys, for guys who are 18, 19, 20, in their 20s or 30s, like, this is my kind of play. I'm in this with you. Trust me. And the same pattern has repeated after every single major downturn. The investors who win are those who just stay disciplined. You don't even have to do anything. The hardest part is just waiting. Alex Becker says this perfectly. It's just sitting on your bags. He kind of jokes about it because he's big in crypto. But he's like, dude, the hardest part is just sitting there, is just doing nothing. Go outside, go for a walk, go to the gym. Don't look at your portfolio. So we'll talk about that in a couple minutes. But like, what am I actually doing right now? No questions asked. I'm continuing my regular investments. If anything, this sounds messed up. I have a ton of cash on the sidelines for this reason, over $500,000. Right? And I know I've talked about, I'm trying to catch myself up back into the stock market of what I pulled out to use for my house down payment. I had a lot of equity in there. I sold my place last summer. That's where most of that money went. But I'm like, listen, I got a ton of cash just sitting on the sidelines. I'm actually probably going to be buying a ton at these lower prices. Again, not financial advice. I'm not really rebalancing anything. I'm just keeping it simple. My single holdings, mostly S&P, and I'm staying away from financial news that might tempt me to make some emotional decisions, because I'm not perfect, guys. Like, I sometimes wake up, I'm like, oh my God, what is it going to be today? Like, how bad, how much bleeding is going to happen in this moment? And it's pretty rough, right? So I'm just focusing long term, not short-term fluctuations, speculation for sure. I'm staying the course, as John Bogle says, founder of Vanguard, huge fan. Now, more importantly, what am I not doing? I'm not panic selling at a loss based on, again, headlines or market predictions or Jim Cramer freaking the hell out and telling you to sell. It's like, I'm not doing that. I'm not trying to time the bottom or wait for the perfect moment to invest more either. That's sure as hell a way to screw up. I'm buying it every single dip. Every time it is red, I'm hoping that it's red. That's what I'm doing right now. I am trying not to constantly check my portfolio. I'm checking it. Dude, if I had to guess, I don't know, it's like 7 to 10 times a day. And I know that's horrible. I'm trying to take my own advice. I'm literally speaking to myself with this. I need to like get offline sometimes. I need to just not, look at it. It's not that I'm freaking out, but I definitely just like to know what's going on. And that mentally is probably hurting me more than it is helping me. And I'm also not abandoning my strategy that I know has worked in calmer times. I know I've done well in 2018 when I started investing, 2019, 2020, so on and so forth. And then it's like one bad year when I'm still in my 20s. I'm not going to let this ruin my life, and especially not my long-term plan, because my family is at stake. My future family, my future kids and their kids are at stake for the moments that I put in place today, from what I buy today. That's just how I'm feeling behind this. So I want to go back to, again, like, I don't mean to make this video doom and gloom, but like, what is the math behind bear markets? Let's just talk numbers for a second. Historically, S&P returned 10%-ish annually on average, but that's not a smooth 10% per year, right? It includes a lot of downturns. If you invested, I think it's 10,000 in the S&P in 2000, right before the dot-com bubble crash, and then held through the 2008 financial crisis, you'd still have over 30 grand today, despite the worst 2 market crashes in modern history, in recent years, if you will. I've been alive for only those both. I wasn't here for, obviously, the 87 Black Monday crash, or any of these other ones, right? So you just have to be careful. Just think of that. Think of what history does, and it most likely will repeat itself. And what is the opportunity in downturns, right? What is the opportunity in red days? This goes for my young guys again. Buffett, I know it's cheesy, said to be fearful when others are greedy and greedy when others are fearful. Right now, fear is everywhere. Look at the fear and greed index, guys. I'm looking at this not every day, but like once a week, just to prove my own point. It's like, ooh, this is the moment, right? Which actually signals a lot of opportunity for long-term investors, right? Every share you buy during a downturn has more upside potential than those that bought at market peaks, myself included. Think of it as stocks going on sale, not as your portfolio losing value. I said this to a friend yesterday. I'm like, if the Ford dealership marked down the brand new Ford F-150 or whatever truck is coming out today at 10%, people will be lining up the door to buy that damn thing. But if stocks go on sale 10%, it's the end of the world. It's, oh my God, don't hit me with that. And they run as fast as they can the other way. It's like, guys, like this is the natural market of consumers. This is what the average consumer is dealing with in their mind. It's like, do you want to do that? No. Like, think of yourself longer term and just dealing with general uncertainty. It's like, no one, not market analysis, not economists, financial gurus, hedge fund guys, can consistently predict short-term market movements. Nobody. Anyone claiming otherwise is probably selling you something. They're probably shilling some course or whatever. And the beauty of long-term investing is that you don't need to predict what I call the unpredictable. You just need, again, patience, right? And discipline to obviously continue investing, keeping the movements, if you will. I guess my last kind of points, what are the practical steps? What can you extract from this video and just do like today? If you just wanted to, the second you click off this thing, what can you do? If you're feeling anxious about your investments right now, one, just revisit your investment goals and time horizon. Write this down if you have to. Just talk to yourself, talk to a buddy if you need to just like bounce some ideas off each other. It's like, remember what we told ourselves like 6-12 months ago? This is probably a good day to have that reminder, right? To just do that and ensure you have enough emergency funds. This is again why you don't want to need to sell your investments at a loss, to clear your debt, to buy dumb shit. Please, guys, just keep cash flow as high as you can. Keep expenses as low as you can. Now is not the time to get fancy. And also, consider turning off the financial news. Consider, muting those notifications. Look at the historical recoveries of the market to gain perspective, to just open your eyes and be like, okay, like it is possible. This isn't actually the end of the world. Even if they do last 6 to 12 months, they eventually, with data, show that they go up over time. And just, again, like I'm harping on this, please, guys, focus on what you can control, your savings rate, your expenses, your investment costs, and most importantly, cash flow. Okay, so what is it? What are my closing thoughts? The market doesn't care that I invested 6 figures at the peak. Okay, it's like a damn Terminator. It does not matter. My emotions about that timing are relevant as to what happens next is also the same, right? My emotions have to stay the same no matter what I do. It's like, it's in there now. It's like, all right, we just wait patiently. What matters is what I do from here, right? And history shows that, again, just staying the course, continuing to invest over a smaller or long enough time horizon, and just, maintaining good long-term perspective is the way to build wealth. That is the way to get rich. And that's what most people aren't going to do. If you're feeling anxious about your investments right now, remember, this too shall pass. The real risk isn't a temporary market decline, right? It's abandoning your strategy. It's abandoning your investments because of long-term and actually short-term fears, both. So again, that's it for today. I hope you found this helpful. As long as, again, if you made it this far, I want to see you win. Comment below with any questions, and we'll see you in the next one.